Welcome back everyone. Today we will be taking a look at the UK-based multinational business Legal & General. Is it worth a buy? Let's find out. Founded over 180 years ago and headquartered in London, Legal & General have grown to become a powerhouse in the financial services sector. So how does L&G generate revenue and what makes them unique? L&G provide a wide range of services in the financial sector. They have three core businesses: investing in annuity, investment management, and insurance. Some of their main revenue streams come from their products and services division, which include life insurance, general insurance, pensions, and investment management. One factor that stands out about L&G is, due to the diverse amount of services they provide, they are able to build cross-selling ecosystems where they can utilize multiple businesses for maximum profit. Also, if providing insurance for over 180 years isn't a good enough sign of their company's strict discipline, then you may also like to hear they are one of the top 20 asset managers in the world with around $1.3 trillion of assets under management. So let's see what we can learn from their recent H1 earnings report. Operating profit for H1 2018 from divisions were £1.059 billion, up 7% on H1 2017. With growth in 5 of their 6 businesses. If we take a look back in the past, operating profit for H1 2007 was £658 million. Now, after constant years of growth, operating profit stands at over £2 billion per annum. Profit after tax was down 19%, to £772 million, in H1 2017 it was £952 million. Starting with their retirement division, LGR, which provides pension income for individuals and members of the corporate division. The Legal & General retirement portfolio currently stands at £13.5 billion, up 37% since H1 2017. LGR reported strong operating profit of £480 million, up 9%, and they wrote £1.1 billion of annuity premium in H1. With them expecting to have an exceptionally busy H2. As they are currently actively quoting on over £20 billion of UK pension risk transfer deals, including over £7 billion of transactions and exclusive negotiations expected to close in H2. And over the next 20 years the UK population aged 65 to 84 is estimated to grow by almost 40%, which underpins a PRT market which is busier than ever. There is also a $25 billion US pension risk transfer market opportunity. LGRI operating profit for H1 2018 was £361 million, up 8% on H1 2017. They doubled US premiums in PRT business in H1. Since starting in the US 3 years ago they have written almost $2 billion in annuity premiums. L&G are already a leader in lifetime mortgages with a 28% market share in the UK, having written £521 million in loans in the first half, up 23%. Lifetime mortgages only represent 5% of their £56 billion annuity portfolio. Legal & General expect a record year in 2018. The annuity asset portfolio upholds a high credit quality, with approximately 2/3 rated A or better, 19% of which is in sovereign-like investments. With some of LGR's largest direct investments including HMRC government buildings, infrastructure including the London Gateway Port, and property such as Amazon's distribution warehouse in London. They secure long-term rent agreements from high-quality tenants. Legal & General retirement retail products also saw 11% operating profit growth, bringing in £119 million. Legal & General investment management operating profit was up 5%, to £203 million. Driven by high assets under management. International AUM increased to £229 billion and now makes up nearly a quarter of their AUM. Successful international expansion with net inflows of £9.9 billion. Total assets under management was a staggering £985 billion. LGIM have set a profit growth target of 8 to 10% per annum. Legal & General Investment Management America, in 2007 was initiated with $6 billion of internal assets, now has over $180 billion under management through successfully attracting international funds. Total workplace schemes increased over 14,000 with in excess of 2.8 million customers, and they have the largest growing master trust with over £5 billion of assets under management. £2.4 billion of AUM acquired as part of the Canvas transaction. L&G are currently the largest manager of DC assets at £72 billion. In H1 of 2017 they had £63 billion. UK retail continuing rapid growth with AUM up 15% to £31 billion. Legal & General Capital is growing assets and building profitability. Operating profit was up 21% at £172 million from H1 2017. Portfolio development continues with £708 million invested or committed in schemes such as launching their affordable house business, and further investment into their build-to-rent assets. They continue to expand into cities where they do not currently have a presence. The traded and treasury asset portfolio was £6.1 billion, with cash holdings of £4.1 billion up from £3.4 billion at the year-end. In March 2018, L&G attained full ownership of Cala Homes by purchasing the remaining 52.1% stake for £315 million. Cala is just reaching scale in a market which is way short of the target 300,000 homes per year needed. Legal & General build-to-rent pipeline is 3,000 homes across 9 schemes nationwide, double a year ago. Cala has achieved a tripling of revenue in 5 years. Units sold in 2013 was 850, now units sold in 2018 was 2,171. Revenue was £244 million in 2013 and now it's £851 million in 2018. L&G are well positioned to achieve their long-term target of 3,000 units per annum. Residential housing construction is currently on 90 sites. L&G's protection division LGI reported growth and premiums up 3% in the UK at £856 million, and up 3% in the US to $635 million. Operating profit was up 5% to £154 million in H1 2018. In the US, operating profit was down $48 million because they experienced higher than expected claims due to elevated cases of flu, in line with the broader market. But they remain the second largest provider in U.S. term life insurance through the broker channel. In July 2018, Legal & General made a strategic investment into Smarter365, which has developed a mortgage broking platform. GI made an operating loss of £6 million in H1, as the result of adverse weather in line with the market, more specifically the Big Freeze. Excluding the freeze, operating profit would have been up £7 million to £22 million. Their general insurance division is becoming more diversified, with their pet insurance business gathering momentum. Their acquisition of Buddies, which was completed on Jan 5 and now integrated into GI business. Gross written premiums were up 12% to £193 million. SmartQuote and SmartClaim continue to attract significant interest from distribution partners. Solvency II surplus is £6.8 billion. With a coverage ratio of 193%. In H1 2017 it was 186%. Also, Solvency II operational surplus generation up by 11% to £0.7 billion. Now let's look at their current stats. Share price is currently 254p. Earning per share is 13p. Interim dividend of 4.60p, up 7% from H1 of last year. Return on equity is 20.3. Dividend yield is a strong 6%. Price-to-earnings ratio is 8.4. 10% growth in dividend per share since 2007. Market cap of £15.3 billion. So hopefully by now you have become more familiar with the company and what they do. Now for some interesting facts. They also invest in clean energy. LGC's sector partner, NTR21, now has 9 of 12 sites in operation in its €246 million UK and Ireland onshore wind fund, and NTR is in advanced stages of the development of its second fund. LGC aims to have 6,000 homes in planning, development or operation by the end of 2019. The urban regeneration business continues to mature, with valuations increasing as projects are developed and units are let across the portfolio. For example, LGC has forward sold a 100,000 square foot office building that has been pre-let to the Newcastle Council for a term of 40 years to LGR in March 2018. LGC also launched its affordable housing arm in April 2018, to address the overwhelming need for affordable housing across the UK. There are more than 1.3 million households on UK waiting lists, with new additions to the housing stock averaging only 30,000 properties a year over the last 10 years. LGC's affordable homes business aims to be fully operational and delivering 3,000 homes per year within the next 4 years. Across LGC's other housing businesses, Legal & General Homes Communities and their later living business, L&G have continued to make land acquisitions to support future growth. The group's balance sheet remains strong with £6.9 billion in surplus regulatory capital. Group-wide direct investment up 38%, at £16.3 billion. In H1 2017 it was £11.8 billion. L&G are ranked 7th in UK household insurance. Ranked number 1 in UK retail protection, with 24% market share. L&G look after the financial security of over 10 million customers in the UK and US and manage investments for around 3,000 institutional clients. The asset management arm of L&G is the 10th largest investment management firm in the world by AUM. It is also the second largest institutional investment management firm in Europe after BlackRock. It has operations in the United Kingdom and the United States, with investment management businesses in the Gulf, Europe, and Asia. So what do you think of Legal & General? Do you own this stock? Or would you invest? I hope you enjoyed this video and I would love to hear your opinion of L&G. Please leave a like if you found the video helpful and subscribe for more stock breakdowns.